welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. Welcome to our show, The Closing Beat. We're financial advisors here at Jazz Wealth. One of the things we like to do is come to you every day and show you the stock market, tell you what's going on. However, we won't be doing this tomorrow. No show tomorrow because I've got to show it again. Just real quick. This is our new client portal that we're working on. We're doing all kinds of good stuff here. Check this out. You'll be able to go into our own custom portal, see your account and everything. This is brand new to us. We're adding changes literally by the day here. You can see all the transactions. You can see all the classes that we do for customers and everything. And now, if you go like this and you say, I'd like to see my IRA, you've got all that in there and how much have you contributed so far. So you can see what you have, what you've got left, where you're at on the spectrum. If it's an IRA or Roth IRA or something that has a limit, you'll be able to see that in there, sort by year, contact me, contact support, whatever it is that you need to do. That's all in the works there. Super, super, super excited. You can even see down to the transactions if you'd like, zoom into things like that. If you want to go into those kind of things, we're working on putting in the actual holdings so you can actually zoom in and see, like you're in the dividend fund, you're in our real estate fund, whatever it is you may be. You can say, well, I want to see what's going on. I want to go in here and see this real estate fund. Let's see what we got. Where's my profit? What do we have? How much of each position do I have? And I want to see the performance. How are things going in there? So we're working on that right now. Super excited. And because of that, tomorrow we're going to be spending some time on that, continuing to add all of that in there so we can move into beta testing and actually start getting some people to check that out. So something no other advisor's doing. And wait till you see what we have planned there. You can actually see the notes. I started leaving notes for customers of things that we talked about, phone calls we've had, emails exchanged, so that we can be on the same page constantly, whether we're talking about credit card debt, whether we're talking about you buying a house, you maybe got an inheritance, whether it's your Roth IRA, you name it. If we can help you with your dough, that's the goal, is to have one central place for that. Phew, we don't sleep. We just get it done. But nonetheless, that's what I want to share with you initially. So let's talk about the stock markets, because the rest of you here that are watching today don't care about that. You want to learn something, and I'm going to teach you something, I promise, here today. We take a look at the stock market here today. Let's. You can look on the right-hand side of your screen. You can actually see. I'm just going to go like this real quick. If I could just dive into this guy. We'll try to set up a little something extra for you here. Market's a little bit mixed again today. What's the deal, man? We're just mixed. Every day is kind of just like, a little bit of, a little higher, a little lower. It's like, what are we doing? Ultimately, we're just sort of treading water here in the stock market. Today, what we had is some news on bullish sentiment. If you want to take a look and you like this sort of thing, I'm going to try to put this in so you can see it a little bit clearer. There you go. We'll go over here a little bit. Perfect. All right, so bullish sentiment sitting at highs. In fact, if you look over the last 5 years, we're almost near highs here as far as the number of participants in the market. It's a survey done by AAII, American Investment Institute, if you want to check it out. They say that almost 50% of people are more bullish in the stock market than bearish. Now, if you were to zoom out and just look back as far as you can see, I'll try to do something sort of fun here for you. If I could just go over here and put on the average, you can see that the average sentiment in the market is about 38% bullish, which, okay, that's average. So you might think it's normally higher, but think about that number for a second, 38% higher. We're now at 50%. I'll just try to zoom in a little bit so you can see. We're sitting right around that 50% mark. This is known as an extreme. So 50% we'd normally think is average, but 50% in this case for the bullish sentiment index is actually extreme. Average is about 35%. So what we thought was, should we be contrarian in that mindset? Like when more people are bullish, should we become bearish? Should we be cautious? Does the market fall? Does the market continue to go higher? How does that translate? This number is actually a weekly number that comes out. It's a weekly survey that they do. And whether you agree or disagree with how they do the survey, it's what happens. That's where we're at. This is 2 weeks in a row that we've moved higher, almost back to highs here, just like the stock market. Now, what we thought is, let's see what happens when we get this extended reading, which 50% or more would be extended. How's the stock market perform? So we took a look at all the readings in the last 10 years that were over 50%, and then we said, let's go 1 month out and see if the stock market wiggles around. Does it go down? Does it go sideways? What happens? So up at the top here, you've got the last reading. This is going to be the last time we poked above 50%. Remember, we're at 49 right now. Last time we did that was on November 12th earlier this year. We're not quite 1 month out yet, but we put the performance anyways. That's 4.04% since then. That's good. All right. So if we're looking through here, what we did is we reported the 1 month performance going forward after an extended reading, or 50% or more, to see what we have. You only got a handful of times where the stock market was negative going forward, so one could argue that bullish sentiment means a bullish market, right? On average anyways. Looking down at the bottom, you've got the average gain 1.67%, median gain 1.83%, so it's positive, and it is positive 76% of the time. So it's certainly something that we don't want to discount, right? Bullish sentiment, bearish sentiment, they are trend type indicators. They are not contrarian type indicators, at least in the last 10 years. This actually goes back to 1987, I believe. We didn't have time to get everything in there, so I just put the last 10 years so you could see. It's actually quite common to be over 50%, especially when the markets are trending higher. So something interesting you may want to check out if you happen to look at that sort of thing. We're going to look at the stock markets here today. You got the S&P on the screen. Another bit of a mixed day, narrow range day, not a whole lot going on there. The S&P sort of had a consistent drag today from the more heavily weighted names, your FANG names in there. You got Facebook down 2%, got some antitrust issues working their way back through the system. Microsoft was pretty flat, slightly negative. That was a little bit of a drag as well. Amazon finished down the exact same amount, a little bit of a drag there. Apple as well, just couldn't get anything going. Just one of those days, quiet, low volume days. In fact, if you look at the S&P 500, although it's positive after hours here, you got a little bit of a lower volume day, and it's been like that the last couple days, so not too bad. Now, later in the day, you saw a little bit of a sell-off that seemed more exciting than it really was because it was a narrow range day. Pfizer pulled back, and the market sold off a little bit. Apparently, there's some vaccine supply chain issues there. However, the amount of vaccines they're still looking to deliver are just astronomical, right? So the fact that there's a little bit of an issue, I don't think it's a big deal. I think that's why you saw the markets recovering a little bit as well. It also lets you know that the vaccine is kind of priced into the stock to the tune of about 2%, at least at the moment, or given the issues that they're having. So you kind of get that feel for it. Remember we did that around Fed days and stuff, like how much of rate cuts are priced in. You get a hint of that just ahead of time. That's what you got going on there. And I'll point out, if you're a Moderna fan, Moderna actually rallied on that news. I think they have the slight edge in terms of the vaccine and distribution and the temperature and everything they've got to keep there. But that's what you had going on towards the end of the day. Now, the S&P is still up 15% year to date, so it's really no big deal where we're at here in the stock market. Just kind of quiet days that we're working through, and hopefully tomorrow will be quiet as well while I'm gone. The Dow up 7% year to date. Today it was pretty much positive. You could pretty much say all the gains today were because of Boeing. So if you look at something like Boeing today, its contribution to the index was just about the same amount that the index was up. Its contribution to the index was 0.28%. The index was up 0.25%. So basically all the gains today came from Boeing, if you're taking a look there. Walgreens was higher, more than Boeing, but it contributed about 1/5 of the total gains. So you got a little bit, or most of it from Boeing, and just a tiny bit from Walgreens there, if you happen to look at that sort of thing. If you like looking at videos and those things, we've got some great FinTips videos for you. We had earlier in the week how much you should have in your Gap account if you're planning on retiring early, so we quantified that for you. We did tax loss harvesting yesterday. We focused on a larger account just to kind of show how we would go about that. How do we calculate it? How do we determine how much to sell? So maybe help you out there if you're looking at the same thing. And tomorrow we're going to show you some data about how much your homes actually gain in value all across the United States, and try to make the argument whether you should pay it off or just let the loan be what it's going to be. It's going to be a highly debated video, I would imagine, there. So I hope you enjoy. Hey, on our research site, we've got a lot of cool things going on in there right now. It's $13 a month if you want to join. Cody did a deep dive on the S&P following 10% gains in a month. And then the watch list that I'm going to share with you here today, I'm going to share the top 7 names with you, and we have a full list getting posted to the research site after the show. So if you like what you see here with the watch list, you may like the research site. And by the way, if you do decide to join and sign up for that, we let you control it. So if you do it for a while, you don't like it, you actually get to press the button to say, I'm done. I don't want to do this anymore. We don't play games like that. So you don't have to call us or do anything. You just, if you like it, you keep going. If you don't, you don't. No problem there. All right, we're going to do this thing that we do this time of day called the sector breakdown. We do the sector breakdown by going over the different sectors of the S&P 500, and we use a tool that we have developed here, or still working on, but putting together to show all those sectors. And what we have is sorted by one-day performance. You can see the sectors. It was a mixed bag again today, basically, with energy leading the way, a 1% gain on the day. If you look at the price of energy today, or the gains in energy today, that's mostly due to OPEC's increase to 500,000 barrels a day, a little bit less than what was expected apparently by oil traders, and so that sector was up just over 1% Actually pretty much right flat on 1% there. So that's what you have there. If we look inside the energy sector overall, you can see how we've performed over the last couple days here. Slight pullback. We went over this yesterday in our watch list there. Cabot Oil was one of the weak ones there. We mentioned this in the research site. We mentioned this stock in general. It's just not participating. If you want to look at the stock there, it's been actually trending lower while energy's been trending higher. That's got to be something you recognize, right? When you're investing in a sector or a stock that's relatively comparable to something else, if your stock's not participating but everything else is going, what's it going to take to get that stock going? You may consider that kind of dead weight for the moment or allocate less towards that. So that's something to consider. You may rebalance back down towards other positions and just let that one slide a little bit, which, by the way, tonight, our Wine and Wealth class, it's a weekly class that we do for customers. We're going to talk about rebalancing versus profit taking, and then we're just going to let the class go where it's going to go, as it always does. So if you're one of our customers, come have a drink with me tonight. I'm going to do it differently. We're going to go over to that screen, the other studio there, and we're going to talk about the difference between rebalancing a portfolio and taking profits in an account. There's a huge difference there, so we're going to go over that. Anyways, let's go back to the sector breakdown here. Going back to all the sectors overall, I want to look at REITs. This is super helpful. Check this out. REITs, the second best performing area. Now, when you're looking at REITs, you know not all REITs are made up the same. We know that. If you've been watching for a while, we've been kind of going through the different REITs. What I want to point out is something really, really interesting that we get to see here based on this little scatter plot that we put together. The gains were not because of the digital REITs or the tower type REITs like American Tower, Prologis, Crown Castle, things like that. The gains just didn't come from there today. They actually came from a whole different set of virus-sensitive REITs, stocks that had been beaten down. Remember how this worked. The energy sector was out of favor, not necessarily because of the virus, kind of a triple whammy there, but energy sector financials were all out of favor. Now those are starting to get the bid, right? So they're starting to get all the interest. In the REIT space, all the apartment communities, the retail shopping centers, they were all beaten down, and now all of a sudden they're getting the bid. So let's take a look at how we can see that. Today, we got CBRE Group in here. You've got Simon Properties. These are all very virus sensitive. Even Weyerhaeuser, think of that as like a timber company, really. That's really what their business is. Today, these were the better performers. These that were affected by the virus, right? If you look over the last year, it's the exact opposite. The big gainers were the tower companies, the digital REITs, your storage space, digital storage space companies, your cloud-based REITs and things like that. All the weak stuff was the virus-sensitive companies, your apartment communities, your movie theaters, your commercial leasing spaces and things like that. That's over the year. So look at the difference there. Big performers and beaten down stocks. Let's go just in the last quarter. It's the exact opposite. The exact opposite. These guys are now being sort of left out of favor, and all the virus-sensitive stuff has been provided the bigger gains. That's been where all the excitement's at. So what do you learn from that? Right? Just by looking at that simple thing, you could tell, well, I don't really want to mess with those other stocks that were in favor for most of the year. All the momentum shifted over here. If you watch the show quite a bit, you remember when we talked about financials. Financials as a whole weren't strong. Financials were strong in the exchange industry, but they weren't strong in the big financial stocks or the regional banks. So that's kind of what I want to point out there for the sector breakdown. Really, really cool how you can see that with just really one click there. And that's there's so much I could go over here, but I like to just kind of share this during the day to show you how I find things. All right, so looking over at healthcare, this is the last one I'll cover here for you. Healthcare, by the way, is the best 5-day performer, up 2.7%. You can see on our screen over here, but it's really all because of Tuesday. So if we were to just zoom out, the performance is, we'll go 5 days here. You can see that basically it's all because of the 1st of December. That was the large gap up in healthcare. Overall, good performing little area here, but we want to look at the 5-day. Look at the 5-day here. We're going to see where is the performance coming from that's added to all these gains here. So it's not pharma stocks. If I choose Pfizer, when I click that, we can see all of the different weak stocks now in the bigger circles. They're not the ones, the industry leading the way, so that's kind of interesting there. If I click on United Healthcare, oh, there it is. All the actions happening in the insurers. So if you look at Healthcare, you say, I like it. I want to be a part of that. Where do I go? Do I go with the whole sector or do I go with the industry inside the sector? Well, you're going to want to look at the insurers there. That's not my opinion. That's what you've got going on there. So hopefully that helps. That's just a quick breakdown of the markets so far. If we look over the last 5 days, it's going to be a lot of the same story. You do have healthcare strong. Tech got a little bit of a boost this week. Communication services, which is also kind of tech. And then the strong stocks from last week, energy and utilities, and even materials are pulling back over the last 5 days. All right, let's go to the watch list here and see what we've got for the day. Ta-da! Ta-da, ta-da, ta-da. Okay, watch list. Here's what we're doing. We're looking at small cap value. You know that small cap stocks have led the way. Even today, it was the best performing area of the market, small cap. We're going to look at the value stocks because they've gotten little bit of a bid here lately. In fact, if we go over to small cap value, they've even almost refused to pull back there. So we're going to build a little bit of a watch list of stocks that you probably haven't heard of. And in our research site, coming up after the show in 15 minutes, we're going to post the full list with a little bit of a breakdown there. Okay, if we look at the small cap value stocks, they have gained over 10% in the last month. That's our starting point. So we look at that and we say, okay, that's fine. In all but one case in 2011, you know where I think I got this from? Let me see, because I want to just do this real quick with you. So I'm going to just go IWN greater than 10% in 1 month, and we're going to look back 20 years. Let's see. So we're looking for gains of over 10% in any given month, provided that this is up and, yeah, it's up and running. Okay. Here's every time that it's happened. It has happened a total of 9 times in the last 20 years, so basically once every other year at this point. So if you're looking at that, here's your gains here. Coming off the previous gains, I'm looking over here. In all but one case were we positive the month going forward. In other words, the momentum after a double-digit gain in a month tends to continue. It's not a lot of data, but it's what we're working with here at the moment. So the only negative month was the following month after October 2011. You had a small, we'll just call it flat basically. Otherwise, we can see that the momentum continues, and so we want to look at that space. You want to recognize things like that so you can say, I see a double-digit gain, maybe I missed out on it, didn't get a chance to participate, but now what I want to do is go, does the momentum continue? Yes. If so, help me find some stocks. Let's see what we can do here. So what I'm going to do, I'm going to look for stocks that also gained 10% in the last month. I'm also going to look for stocks that are right around positive year to date. I don't want ones that they're outliers and they're already up 50%. And I don't want stocks that aren't performing and they're still down 50%. I want stocks that sort of replicate the index itself, maybe showing a touch more momentum than the index, just to give me a heads up there. And today what I'm going to do is cover almost all of these, if not all of them besides the bottom one there. That one shouldn't be on there. We could delete that one. All the ones I'm going to share with you, the 6 names on that list there on your right-hand side of your screen, these are going to be tech-based names. So tech happens to be the best performer out of our scan that we did on the research site. We'll do all of them so you can see all the different ones. All right. You've probably only heard of 1 or 2 of these here, but let's go through them. So you got Verint Systems here. It's back office software type stuff there. It's also profitable, by the way. Just recently hit new highs. It's moving along with the momentum of the small cap value stocks. Just started to pull back. You got support right around $54 if you happen to be looking at that. All right, we're looking at Universal Electronics. You'd know these guys if you saw some of their widgets that they put in TVs and remotes and stuff, but you might not recognize the name. Up 1% here on the day. It's a home automation, audio-visual type stuff, but they make the stuff that goes in it. They don't make the actual end product there. And so if you look at this one, refuses to pull back, showing relative strength compared to the small cap value sector there. Has a little bit of room to run back to highs, and I would argue maybe just a touch extended here, so it's a watch list idea. Rackspace comes up on the scan, and it comes up because I think this was a spin-off. I can't remember what they did back in the summertime. But anyways, stock's obviously strong in the short term here. Doesn't have a full year-to-date performance. I think this one's just kind of a recent spin-off. That's why it looks like this. But nonetheless, it's participating in that value space. It's participating. It's something you might want to look at there. Here we go, Power Fleet. These guys do, like if you have a very large air conditioning company and you've got trucks going all over the place or something, you want to keep track of where they're at. It's kind of what they do. That's that software and stuff that goes in there. Think of it as like fleet monitoring sort of thing. Doesn't have to be air conditioned. Anyways, up 30% here in the second half of the year and performing right alongside the index. You would call this inline performance with the small cap value index there. It's pulled back to the 50-day moving average where numerous times it has shown that it likes that for support there. So that's one to take a look at and of course comes up on the list. Insight, here we go. This is obviously a tech company here. I think it's the most profitable company out of the list. I can't remember. I did this last night, but I think it has the largest profit margin out of the group. It's already back to highs compared to the last 52 weeks here, and just kind of refuses to pull back. If you could get a little pullback there, you would argue that that may be one that's a little bit stronger. Also, we ranked these on the research site by analyst recommendations as well. So in case you don't want to do any research over the weekend or something, you could see what analysts are thinking about it. If you're looking at that post when it goes live, if it has a 1, that's the best. 1.5, not as good. 2, and so on and so on. The further away you get from 1, the less positive analysts are on there. It's just an easy way to put that out there. Last one, we got Xperia Holdings here. They really beat on last quarter earnings. This little pop right here is a beat on earnings, which made them profitable to the tune of like 58%. Huge, huge change for them. In the small cap world, when things like that happen, you get big moves in stocks, which you did here, and it just refuses to pull back ever since then there. And we'll see. Maybe they're going back to profitable for the year. But that is your watch list for the day. Some names that maybe you wouldn't have looked at or maybe even considered scanning for. So we'll let the stream catch up for a second while I review some stocks in the news, and then I'll take your questions and see what we have. There's actually a lot of stocks in the news here today. You got Cracker Barrel. This is an earnings-related play. Cracker Barrel beats on earnings by 25 cents. Revenue stronger than expected. All their stores down here are open, so they haven't really been affected. It's kind of like Texas Roadhouse. They haven't really been affected too much because where they have their restaurants aren't as strict as some of the areas around the country where they've had to have lockdowns or very limited capacity. So Cracker Barrel doing well, recovered from a little tiny gap down today. Costco down 2.46% there. Same store sales down just a little bit in October. That always happens to Costco. They have double-digit sales growth pretty much always. So whenever it's a little off, people think that, uh-oh, this is the top. I don't know if it is or not, but we'll see. Waddell and Reed, if you have any scanner, that's going to be one that came to the top of your list. It was up 50% today. They're getting bought out by, who is it? McGuire, I think. It's an analyst group out of Australia. McGuire Group, yeah. They're paying $25 a share. These guys do what we do, only I think we do it better. This is an asset management company there. 25 bucks a share. Just so you know, right now in the financial advisory space, mergers and acquisitions are going like gangbusters. If anybody wants to buy Jazz, I'll come here and make these videos and somebody else can run the day-to-day stuff. So if you want to pay 25 bucks a share, I'm open. Hey, just saying. And one last thing to take you a little bit further, just because this happens to be one that I know about. They're not buying, McGuire's not keeping the whole company. There is a company called LPL, and it's a public company. Very big. I think they're the biggest financial advisors in the space there. Boy, they make some good money because they charge you guys a lot. But anyways, they're going to be taking over the asset management. So if you look at LPL today, that gap to new highs, that's because they're getting 60-something billion in assets from McGuire thanks to the acquisition of Waddell Reed. So a little bit of a, going different directions for you. Okay. Lastly, your Chinese stocks. Getting a little bit of relief from the bill that passed, which actually puts more restrictions on them. Look, this bill that Congress passed, by the way, is not to delist Chinese companies. That's the key word that they put because it gets you to click on the articles and stuff. Read the bill. The bill is just saying, hey, if you're a Chinese company and you list on the NASDAQ or here in the United States, you're going to have to show us your books just like a U.S. company would have to do. Right now, they don't have to do that. So the restrictions are saying either participate like the American companies do or go away. So yes, they technically could be delisted if they don't participate. They're going to participate, right? There's no way around it there. They're not going to just get up and walk away. So delisting is highly likely not going to happen. I've gotten a million questions on that, so I just read through everything just to see what they're actually proposing. That's the proposal. So you're not in trouble. If you own Alibaba, JD, all those stocks today, you saw them move higher because a lot of people think this is kind of it. Like Biden, the new administration, they're not going to bother messing with these people. So these restrictions will probably just fade away. It won't be a big deal. We can now put the Chinese thing behind us as far as how Congress is thinking of it. So that's where you're at with that. All right. Oh, oops, my bad. All right, let's see. Earnings tomorrow. Big Lots and Home Depot Supply, which Home Depot is buying back, by the way. You got dividends from health insurance companies. United Healthcare, $1.25. Anthem, 95 cents. Nike, 28 cents. H&R Block's paying out 26 cents. I'll do my best to try to answer your questions and see what we can do there. Boeing, by the way, another lesson, right? Corporate America, you may think is greedy and nasty and all that stuff. Whatever. We could put that aside. They know how to manage money efficiently, even though it's not theirs and it's stockholders and all that stuff. Ryanair, which is a public company, decided that they're going to bump up their order. Smart. They're bumping up their order for the 737 Maxes, like $9 billion now or something. And so Boeing got a pop on that news that now they've got people starting to trust them again. I don't know if it has anything to do with trust. I think it has everything to do with them saying, we want these planes. We think there's going to be some time before other people start buying these planes. Let's get in line, just buy a whole bunch of planes. They'll be fine. We'll figure it out. And so that's what you have there. That's why Boeing was higher on the day. Very smart. They buy when nobody else wants to buy, right? Do that with your own money. There's so much corporate finance can teach you about your personal finances. You just sometimes have to be heartless about it and just make moves based on money. And I'm sorry if you disagree, but you know, it's money at the end of the day, so you got to do what you got to do to make your dollars add up. All right, let's see what we can do here. I'll try to answer some of your questions if I can, and we'll see what happens. Beijing Biden, huh? Oh, I like it. Thank you for saying that. Any comments on this goofy stock here? So this here, you know you've been watching. Let's take a look. I messed this thing up. I'm going to go back over here, just make this nice and clean for you. So it's one of the goofy stocks. We call it a goofy stock because if I say the actual word of what these guys do, then YouTube gives me a whole lot of grief, and we don't want that. No, low price stock here, lots of momentum in the short term, lots of volume. You got to be careful. This is extended. Watch what happens over the next couple days. Even if it does pop closer to 10 bucks, you're going to expect to see some sharp and heavy profit taking there. So if you own it, you want to be a part of that. If you're thinking about buying it, I wouldn't say that this is the time to get all excited and try to chase that stuff there. So just a friendly heads up there. Yeah. You like Lennar, trying to do a little swing trade on it. Careful with the home builders here. The home builders have fallen, well, I don't want to say they've fallen out of favor, but they've lost that buying momentum because the buying momentum all spurred from what we all recognized, which was that people were buying and building homes like crazy. We've priced all that in now. So now these stocks have nowhere to go until there's a new influx of inventory that can be sold or land that's purchased or some big announcement. So right now, a lot of these home builders, it's kind of dead money, right? Lennar's no different. Just been basing sideways here like the industry. And so I would be quicker with it. I don't know if it's like a swing trade. I think it's more of a quicker trade if you try to play some really short-term momentum. Yep. I love it. Buy when you can, not when you have to. Yeah, borrow when you can too, not when you have to. If you're one that likes to borrow. If you don't like debt, that's okay. You can stay away from it. If you don't mind having debt, then get the debt when you don't need the debt, because when you need it, they're going to charge you more. That's a great corporate lesson there. Yep, I love it there. I haven't looked at Wells Fargo in a while. Let's see. Nice and steady there. Worst performer out of the big banks, naturally. It's been really, really weak there. Finally looks like it's comfortable with that $20 as a low. Yeah, that's a tough one to get excited about given how weak it's been. You're playing the weakest stock in the space, so you got to expect some of that pressure. This is how it works, right? You've got all of these people going all the way over here to all the way over here. You know there are people holding shares that have a loss. And so as it starts to rally back, you have these people over here going, well, 29 is better than when it was at 20. I'll sell now. You also have people that have capital losses. As you get near the end of the year, people are saying, well, I got a $3,000 loss. I might as well sell the stock and write it off because all my other stocks had gains. Or I've got a $10,000 loss here in Wells Fargo, but I've racked up a $20,000 gain by trading all year long. So maybe I'll just sell my Wells Fargo, brings down my tax bill. Got to do it before the end of the year. So careful. There might be a little bit of a lid on Wells Fargo. could be elite. I am not saying. I'm just saying that's the case. All right. I think I've done it. We did it. Another day here. I appreciate you guys playing along with us. Remember, no show tomorrow. We're going to be working on the software. Super excited about that. Super excited. I appreciate you guys watching, supporting us, being along here with us, and helping us get to where we are at. I appreciate all of you that have joined us here at Jazz Wealth, whether it's a research site or as customers. We really appreciate that, and we're going to keep going, keep giving you the goods. You enjoy the rest of your day. We'll see you again on Monday, and adios.